Are you looking to become a better real estate investor? Then hang on, because you're about to experience another episode of the world's most popular real estate podcast, the BiggerPockets podcast. But before we get to this week's show, I wanted to invite you to become part of our community, BiggerPockets.com, the real estate investing social network. The membership is free, and you'll instantly gain access to networking opportunities, educational content, investor tools, and more. Sign up now and get a free copy of our book, The Ultimate Beginner's Guide to Real Estate Investing, read by hundreds of thousands of budding entrepreneurs. Just click this link right here or just head to BiggerPockets.com. With that, let's get to the show.
This is the BiggerPockets Podcast, show 98.
You're listening to BiggerPockets Radio, simplifying real estate for investors large and small. If you're here looking to learn about real estate investing without all the hype, you're in the right place. Stay tuned and be sure to join the millions of others who have benefited from BiggerPockets.com, your home for real estate investing online.
What's going on, everybody? I'm Josh Dorkin, host of the BiggerPockets Podcast, here with my co-host, Mr. Brandon Turner. What's up, Brandon?
Just trying to throw you off by making some fun faces at the camera.
You're killing me. You're killing me.
That's right. How you doing?
I'm good. Happy Thanksgiving.
Happy Thanksgiving.
Yeah. Today's our Thanksgiving show, 2014.
Which the vast majority of people listening to this, it's not listening on Thanksgiving, but whatever.
Possibly,
deal with it.
Possibly.
Deal with it.
You know, is it better to listen to you and I, or to listen to the bickering that's happening at the dinner table with the family?
That's true. Or the football game to go watch Dallas lose or something. I don't know.
Yeah. I mean, I personally choose me. So
there you go. Good
Mom
job.
And Dad, if I'm not there, here's where I am. Yeah, man, things are good. We got a pretty cool show for everybody today. I'm definitely excited about it. Before we get into that, actually excited about a few other things over here at BiggerPockets. We've been adding some new folks, and so definitely want to give a shout out to all the new BiggerPockets family members who've joined up in the past few months. I am thankful to everybody who has come on and joined our team and begun working for us. It's been really exciting watching this company grow. And so I'm just thankful to all of you. And actually to you in particular, Brandon, who last week celebrated 2 years working for us here at BiggerPockets. So, it's, for all those people who think you're one of the founders, that's just not true. Stop spreading the lies. And no, I'm very thankful to have you. You're an amazing asset, and all of our visitors and listeners should be thankful to have you here as well.
Well, thank you. I am thankful for this job. This is a good thing to be doing every week. I wouldn't want to be doing anything else. So
that's awesome, man. That's awesome.
All right, moving on.
Well, cool. Well, let's move on and kind of talk about our guest. Our guest is a man named Allan Glass. Allan has been in real estate for quite a while. He's been doing this for a few decades now, and in the Southern California, Los Angeles area, from pretty much everything from commercial to residential flipping. He's pretty much done it. He's done it all, and he's got just a ton of amazing insight on some advanced topics that we really haven't covered before. And I'm super excited. There's a big focus on creating value out of real estate. And so if you don't know what that means, then I definitely recommend listening. And even if you do know what it means, this show might kind of should give you a few things to think about. So I certainly recommend paying attention. And that's what I got. Brandon, you have anything you want to add, or?
You want to do our quick tip?
Yeah, let's do our quick tip. What is it?
Today's quick tip is go tell somebody today you're thankful for them. That's it.
Oh,
look at that.
Really sweet. You're such a nice guy. It's not true what they say about you.
It's not true. My mom loves me. All right. That's the quick tip. Yeah. Nice and quick today. And with that, I think we just got a word from our sponsor before we get to the interview. So let's, we're going to play a recording that they made. Pretty cool. Here we go.
Lending Home is the next generation online direct lender. Through institutional capital and best-in-class technology, Lending Home is softening cost, increasing loan amounts, and improving transparency. Our soft costs start at 8%. Our larger loan amounts are a function of our ARV-based lending and rehab holdbacks. And our transparency comes in the form of no junk fees and a borrower portal detailing your loans step by step. Spend 3 minutes to enter a deal and see a real term sheet now at lendinghome.com.
All right, good deal.
Awesome. Cool. All right, guys. Well, let's get this thing going. Let's bring on Allan. Allan, welcome to the show, man. It's great to have you here.
Thank you very much. It's a pleasure to be here.
Great. I'm really looking forward to today's show because, a lot of times we talk to the guys who are just getting started. Like last week, we talked to Kyle, who was just getting started. You got started a long time ago, though. I mean, not like, in the 30s, really? But I'm not calling you old. I'm just saying you got
right
started
out of the gates.
Right? Like you were doing real estate when I was, still probably in, I don't know if diapers was the right word, but
30 is old to Brandon. So let's,
So yeah, let's talk about your story. When did you get started and, kind of what got you into real estate?
Tinker Toys and Legos.
Nice.
It's honestly, it was, I started out in college as pre-med major and learned very quickly halfway through my first semester that 9 years of studying biology, chemistry, and physics just wasn't for me. So went through a bit of an identity crisis, and my grandfather had been in the business, and so I'd been around the trades, since I was a little kid, and always enjoyed, like I said, playing with Tinker Toys and Legos and building things. So it was a natural progression for me to find the real estate side. I thought at first I wanted to go into architecture, but realized that it's 5 years, and all of the work that I had done my first semester would basically count for nothing. So lucked into the business school and found a real estate finance degree and started out there.
Nice. And so you were at USC and ended up with a real estate finance degree, correct?
Yeah, exactly. And then from there, it was all roses my freshman and sophomore year. And by the time I graduated, we were in the midst of the last Great Recession back in the early 90s. And everyone was dealing with foreclosures, losing properties, trying to figure out what to do. A lot of people losing their job. So as a lot of people would think, I guess that would be the worst time to graduate and try and find a job in real estate.
Yeah.
I think actually it turned out to be one of the best times and a lucky turn for me.
That's great. Well, so we haven't actually talked to a lot of folks who have finance degrees in real estate. And so I'll just take this chance to ask you, I mean, was that something that you found to give you a distinct advantage at all? Or is that kind of par for the course for getting into the commercial space?
No, there are a lot of people that have, varying degrees. Not everyone has a finance degree. And coming out of the gates, you learn all the fancy formulas and ways to analyze real estate, and got a quick punch in the face on my very first, what I was hoping would be, a big positive presentation with the top brokers in the company. And gave them financial management, rates of return, along with cap rates and yields and all that stuff. And the one of the senior guys looked at me and just said, what is this nonsense? No. And back to cap rates and internal rates of return and all the simple stuff that most everyone that's at least on the finance side of real estate understands.
Gotcha. So would you then recommend, I mean, do you think it's something worthwhile for young folks? I get emails, by the way, from people from 16-year-olds, 17-year-olds, 18-year-olds who always ask me, what should I do? Should I, focus on this in school, or should I just worry about it afterwards? So what would you say?
I think it's definitely a positive. And it's what I found, again, going back to the fact that I came out of real estate when everything was in the tank, is it gives you a bit more of an arsenal to figure out what something is worth or how to add value to real estate. So for me, it was a tremendous advantage. It was a great time to come out in real estate, again, sort of contrary to what most people would think, because you couldn't luck into success. You really had to figure out what to do with a piece of property that was vacant and boarded shut, or was functionally obsolete and needed to turn into something else in order to add value and do transactions.
Gotcha.
I think that's an interesting point about like when you get started. When you get started in a market that's climbing very rapidly, like imagine getting started in 2005 in real estate, right? Like everybody is a genius in a bull market. Isn't that the quote, right? So
absolutely.
And then, so they do really well for 3 years and they go on a speaking tour around the country about here's how you make millions in real estate. And I mean, I think that's great. I mean, it's one of the things I hold as one of the, I don't know what you call it, like the benefits. I don't know. What's the word I'm looking for? Whatever. The things that like I got started in late 2007, right? So like I learned from everything falling apart. I mean, that was my lesson. And it sounds like you're the same way. And I think a lot of investors that are still around today that have been doing this for a long time are like that. Can I ask a little bit more about like when you got you got out of college and you got into real estate?
Yep.
Did you start buying your own properties at that point? What were you doing? Were you working for a larger company and helping, analyze, or what was your role then at the beginning?
Yeah, I my first job was with a company called Cushman & Wakefield, which is one of the largest commercial brokerage firms in the United States. And I ran their industrial market research department and was bored out of my mind. In fact,
what does that mean anyway? Like,
well, I lasted, I think it was 9 months. But just to give you an example, the guy that trained me was the guy that had my job before me. And he said, well, really, this is a job that takes about 2 days a week to do. But if you just kind of slow yourself down, no one will bother you. And you can make it stretch out and last a week. So I knew I was going to look like an all-star following that guy.
Nice.
But
What's his
yeah,
name?
so no, we'll keep that one quiet. But so way I started was just really kind of trying to fill out those extra 3 days of the work week and find out what other opportunities were there, getting to know all the brokers, the senior guys, asking them what kind of deals they were working on and trying to figure out the type of real estate that I wanted to get into. So I actually ended up meeting one of the senior brokers that owned a bunch of shopping centers in of all places, Arizona. And the problem he had is that he'd put a tenant in, pay commissions, pay for tenant improvements, and then within a few months, the tenant was out of business, and he hadn't even broken even on the cost to get the tenant in there. So the idea that I had was from actually one of the shopping centers around USC, a guy that would get involved with the entrepreneur program and mentor these guys that were starting new businesses, give them space as his investment, and it sort of helped them move along and become more successful or get a greater chance of succeeding out of the gates. So I got the opportunity of all things to pitch a restaurant to someone that was looking at restaurant space. And I had been a busboy for a few months when I was 16 or 17 years old, and that was pretty much the experience I had. But made the pitch anyway, and the guy liked it and said, "Okay, well, if you put together a business plan, I'll be your investor." So being as wise as most people are when they're 21, I quit my job with no money and moved.
You were going to be a restaurateur, though.
Right? Exactly. I had these, great plans. And sure enough, I moved to Arizona. I lived in a fishing trailer and showered in the spigot outside the warehouse records. Wrote my business plan. The guy put me off for several months until finally I couldn't wait any longer. And I just decided, there's no way I was going home with my tail between my legs. So I pulled out every credit card I could, learned how to collaborate by finding engineers that were willing to trade, electricians that were willing to trade work for beer and food, and got my restaurant up and running. And that was really my first real estate deal. It was more of an entrepreneurial venture, but it came out of real estate. And so did
that, your investor fell through? I mean, the guy never showed up.
Guy never showed up. So we funded it ourselves, myself and my partner, with, like I said, every credit card that we could coax a bank into giving us, and all the trade that we can do. So
wow. And I'd like to just chat on that for just a second, because I've had a couple of conversations in the past few days with people who have been, come to me about investors who've talked to them and said, "Hey, they've expressed to me how, excited they are that these investors have said, they want to get involved with them and they want to work with them." And I guess I just want to kind of put it out there to folks who may not know this. Just because somebody says that they're interested in working with you doesn't mean that they're interested in working with you today. Or they may never really want to work with you, and they may just be polite. They may be excited for the moment, but it happens a lot where you talk to somebody and they say, "Hey, yeah, listen, that sounds great. That's a project I'm really interested in," and in the end, it never happens. So I think there's this expectation thing that I tend to hear from a lot of people, how super excited they are about stuff, and the money falls through, and they're lost. They don't know what to do. Their life is over because they've put everything into this money coming. And as somebody who's been in the business as long as you have, I'm sure you've seen this many, many times. And I guess I'd love to hear your take and maybe some encouraging words to folks who, don't set your expectations too high, but what else would you say?
Well, I agree with you. You come to someone with a good idea. It's a rare person who says, wow, that sounds spectacular. I'm not interested.
Right.
But if you're going to put all of your eggs in one basket, then it's really kind of on you, if it doesn't work out. So I believe you should always have a backup plan. It kind of goes back to what I was saying about coming out as a finance major and understanding various ways to analyze real estate. If all you know is how to figure out a cap rate, and that's the only way that you can figure out value, then you're kind of limited in the scope of what you can do. But just like starting a business and finding capital, if you know you're looking for backup plans, if you're looking for second, third equity investors, several lenders that might be interested, or if that all falls through, what's an alternative way to finance something, then you stand a better chance of success.
Yeah, for sure. Well, can you tell us really quickly about the restaurant, what happened, how to go, and then I want to kind of move on to more of the traditional real estate.
The real estate, yeah. So once we got it up and running, I didn't want to run a restaurant. I just wanted to learn how to start a business. So about a year into it, I moved back to Los Angeles and met back up with one of the top brokers that I actually had interned for when I was at USC. And he, at the time, was getting into REO real estate. This was still in the very early 90s. So REO was a fairly new thing, especially on the commercial side of real estate. And what was different back in the early 90s is commercial brokerages in particular didn't want to handle or deal with the junk, which was what REO, property was. So since this guy had really focused his efforts on that, they kind of gave him the ultimatum: you can stay and work on commercial real estate that, we feel is appropriate for our company, or you can leave. And he chose to leave, and that happened to coincide right about the time that I was looking to come back and get into real estate. So the two of us left together and basically started a brokerage company on our own in downtown that focused on REO properties, and in particular commercial REO properties. Nice.
Yeah. That's great. And how did that go? And I know eventually, you went to New York and you got a master's. So, maybe you could kind of transition to there, and then we're going to probably just start beating you on the head with all sorts of commercial real estate questions.
Sure. Yeah. I mean, I guess fast forward through the next 4 to 8 years, I moved out of brokerage. We were doing 50 plus REO deals a month at one point as brokers, until finally I got to a point where I had saved enough capital to buy my own property and started investing, rehabbing, and selling. And towards the end of the 90s, I started to notice that the spreads that are our profits were starting to shrink as investors got a little more aggressive, or rehabbers got a little more aggressive in the way that they would price themselves into a deal. So, and that was typically basically pricing in appreciation, assuming that the market was going to continue to go up. So,
which sounds a lot like today, what we see today with but investors paying more and more.
Exactly. And, unfortunately that didn't work out well. I mean, I guess it worked out well, but not as well as it could have. I sold everything that I owned investment wise in 2000. And cashed out to go and get my master's degree in New York, master's in real estate development. But over the course of the next 3 years, if I'd have held on to that property, I would have seen a nice run up. But just, my mind told me that it was starting to get too aggressive, and that was time to sort of price myself or move myself back out and stay conservative. Then when I came back from Columbia, I got back into renovating again, rehabbing properties just by accident. Bought a property in North Pasadena and started falling in love with all the historic districts that I don't know if you guys are familiar with Pasadena, where the Rose Parade is held every year, but they have beautiful homes, craftsman homes, Spanish style homes that were built in the early 1910, 1920s era, and started restoring those and working on the brokerage side with larger developers in Los Angeles, focusing on downtown Los Angeles and the adaptive reuse ordinance, and turning around old, functionally obsolete office buildings into loft apartment buildings.
All right, so let's kind of examine some of the stuff. First, let's talk about functional obsolescence for those people listening who may not know what that means. Can you kind of fill that in a little bit?
Sure. It's when, originally a building is built for a specific purpose. An example might be a warehouse building. And as time goes on, several things can change. Either where it's located is no longer suited for that type of use, or just the actual building itself is no longer functionally able to, handle warehousing the way that modern warehouse buildings would be. So you're left with a building that has less or no value. And you need to come up with a new idea on how to repurpose that building for something that would provide value.
Is that a complicated process? I mean, you have to work with the city, I'm assuming, to do a lot of that stuff, correct?
Yeah, you need to know where it's encouraged. You can't just go into an industrial zone, for example, and decide that you're going to build housing.
Right.
So, you need to understand the appetite for that from the city's planning side, but you also need to sort of understand the way that consumers are going to view it. A lot of times you'll go into a particular area and people just don't want to live there or live there yet. So you've got to watch both sides of that to really be successful at it.
What data do you look at to make those determinations? I mean, it seems like it's almost as much of a bet like an appreciation play as, well, it's almost similar to an appreciation bet. You're kind of rolling the dice a little bit based on certain data, right? So what data are you actually analyzing for something like that?
Well, I try and find the path of progress, and I always talk about bookends. So I look, when I'm looking at a particular market, I look for two particular bookends or neighborhoods and areas that are already thriving, whether they're new and been turned down or they're just traditionally strong areas. And then I watch how the market's sort of growing out from those centers and try and fill in the middle of those bookends. An example of that in Los Angeles would be downtown Los Angeles and the west side of Los Angeles.
Yeah.
West side obviously is where all the higher end homes, where the beaches are. Downtown obviously is the old commercial center, which is turned around quite a bit lately. So in between, there's a freeway called the 10 Freeway, Santa Monica Freeway, that connects it. And those neighborhoods in between, over the course of the last 20 or so years, have fallen into disrepair or become less desirable. But as that 20-year period has sort of moved forward, you can see that those neighborhoods edge out from those particular bookends and fill in, and properties go up, values go up.
Right on. All right. And I know we're jumping around, and I'm sorry, but brain is stimulated. We got a lot going on here. I want to jump back really, really, really quickly to the master's and ask you the same questions that I asked you about the undergrad. Was your master's well worth the time and energy spent getting it?
For me, yes, and really more so by the network and connections that I made, the people that I went to school with, less so about the book smarts or the lessons that I got sitting in class. And,
okay.
Yeah. My purpose for going across the country to New York is everything I had done, from my education to all the deals I had done, had been Southern California centric.
Yeah.
And I wanted to know, well, how do they do real estate in the East Coast, and is it any different? The answer to that is no. It's not any different. Which I guess you get a lot of confidence from knowing that you can understand how to do things in different markets and in different areas.
Yeah, right on. And then the other thing I was going to ask, just give me kind of a broad picture of, for everybody listening. I mean, it sounds like you were rehabbing properties. You've done commercial deals of various sorts. What else have you done as an investor for yourself? I mean, have you done buy and hold properties, multis, office? I mean, give us kind of the really quick synopsis of what you've kind of accomplished, and then we're going to start really digging in on some of these things.
Sure. Yeah, we've floated through different product types, property types. Really, the focus of my practice is value-added or opportunity-driven real estate. So, we've bought anything from boarded shut crack houses in South Central Los Angeles.
Nice.
Yeah, to small apartment buildings that we assembled together for larger development sites. To small retail commercial properties around Los Angeles.
Nice. Right on.
You know what just kind of comes to mind when you're talking about that is, I'm residential only, right? That's all I focus on. But you seem to focus on a wider variety of things. I guess, do you have any, advice for me? I mean, like, should I be looking at commercial as well? Look at whatever's out there? I mean, I guess the line between commercial and residential is usually pretty strict, but with you, it's kind of blurred. So why is that? And any thoughts on that?
I guess the first bit of advice I'd give you is just to understand that it's not that different. So I know a lot of people get intimidated when they talk about the jump to commercial versus residential, and it really isn't that different. It's certainly not that much more difficult. It just, I would say that there are a lot, not that the residential side doesn't have very professional people working in it, but the expectation, or at least in Southern California, I'm not doing this all over the country, so I don't know if it's different there, but the level of expertise is typically a bit higher.
Yeah.
The process of figuring out what something is worth is pretty much the same. If you're going to hold it for income purposes, you're figuring out what you can rent the property for. You're figuring out what it would cost to renovate it and put a tenant in there, and the calculations are the same to get from your gross income down to your net income.
Yeah. You use the term opportunity-driven real estate value add. It definitely makes sense on what you were talking about in terms of changing the purpose, right, of a property. How else can somebody add value to real estate? And maybe again for some of the novices listening, how does that increase or improve your portfolio? So commercial is very different than residential, right? It's not based upon general comps. Valuations come out of something else, right?
Yeah. Well, I'll just sticking to the residential side. This type of market, I think, is a perfect example of where you add value and differentiate that from distressed. Everyone understands how to rescue a distressed property, somebody that's upside down on their loan, something that's bank owned, something that's boarded shut, and add value to it by making it pretty and selling it to a homeowner.
Yeah.
But there are other ways to find opportunity, and it becomes, I think, very important when you're in a market like this, as short sales and distressed properties are starting to diminish. To figure out other ways that you can make something more valuable by one example is the one I just gave you about assembling a site together for a larger development site. Example there is where they're putting in mass transit in Los Angeles, which is a fairly new thing. And they have these light rail trains that are one in particular that's running from downtown Los Angeles to the beach in Santa Monica. So the city is encouraging more density around those train stops.
Yeah.
And we were able to find a site that was underutilized, a very big piece of land that only had, it was actually 4 different properties. One had a 6-unit, a 2-unit, a 3-unit, and a 4-unit on it. And what we did is basically assembled the site together, bought one piece, got the other owners together, and helped them realize that we could essentially, if they were interested in selling, sell their property for double what it would be worth as one development site.
Gotcha.
And so that's how we got to, a higher price and added value there. We ultimately sold that property to an affordable housing developer that's going to build 72 units on the site for veterans and seniors.
That's great. Very creative.
Yeah. And another one is, again, City of Los Angeles has encouraging density come up with a new ordinance they call the Small Lot Subdivision Ordinance. And essentially what it does is allow you in commercial or multifamily zones to build multiple dwellings on one particular parcel number. And it's sort of a compromise between building condos and building single-family homes. So you can build essentially a 600 square foot footprint and sell it fee simple, like you would a single-family home with no homeowners association. So I bought a duplex on a very large piece of land that also had an alley-locked piece of land behind it. And instead of just having 2 units on it, we're about to tear it down and build what will be about 6 small lot or townhouses.
Nice. Again, very, very creative. Yeah, that's great. And it's interesting hearing this stuff again, because on the show, at least, we don't talk about a lot of this stuff. And I think we need to do a better job of doing so. It seems like as you kind of expand your knowledge base, there's obviously a lot more creative things that you can do than just, simply slapping paint on a house. And it's great to hear those different things. You're still a commercial agent, correct?
Yeah.
And now, do you recommend that as a means for entering the business for people? Is that, something that novice investors should do? Did you get a lot out of that in terms of your knowledge in doing deals? Or I know I've asked you, again, 2 questions on the masters and the other stuff. A lot people are always trying to figure out, how do I get into the business? How do I learn it? Is that a great way to go?
Yeah. We do both commercial and residential on my brokerage practice. Yep. But I encourage you, you always want to add value to the transaction, right? And anything that you can bring to the table to add value is going to help you out, whether you're looking to buy on your own account or partner with somebody who has the money or someone who's going to buy a piece of property and get a taste of it so you can then spring out and go on your own. Yeah. For me, it's been tremendously important. It's how I learned to value property. It's how I met most of my investors. It gives me an opportunity to, at times, wholesale properties. So if it's something that I pass on for one reason or another, because I have a brokerage practice and longstanding investment relationships with other buyers, I can typically put something under contract and find somebody that would be willing to take that over for me in short order.
That's
great. Cool. It's nice to see, a lot of wholesalers are, brand new, just trying to get started, with no money, nothing down. It's nice to see an experienced guy. You still wholesale deals if you can. That's
absolutely. Cool. And I'll tell you, to me, there's a very big difference. There are some guys out there that consider wholesaling just taking a look on the MLS and calling people up saying, "Hey, would you want to buy this?" So, again, add value. You should always be bringing something to the table. And if that's just something as simple as being the guy who tied it up under contract, that's worth something.
Yeah.
But yeah, I mean,
that's cool.
I'm a deal junkie, so I like to do deals. And if I'm not buying it myself, odds are I certainly know somebody, at least in Los Angeles, that would.
That's great.
That's cool. Yeah. What is your typical? I mean, again, you do stuff that's different than most of our guests have done. I mean, you're doing a lot of stuff. So, what does your typical day look like? I mean, a day in the life of Allan. What's that like?
Well, I wake up, Brandon, and like to listen to Diana Ross records.
Right? I'm trying to think of something that sounds very sexy and entertaining, but really, it's looking at deals. I think that's really the job. If you're going to be an entrepreneur, that's your job, is rainmaking. So in real estate, that means constantly looking at deals, constantly calling people that are looking at deals, and to me, that's other brokers, wholesalers that I know are very active and are delivering deals, and the other investors that I know in town that are actively marketing. I do a lot of reading, and it's not just the nuts and bolts real estate reading. I like to get into the social side of it. If you understand where people are going, what people are interested, it kind of gives you, again, a leg up trying to figure out where the next spot to invest will be.
I read the other day that the average CEO reads 60 books a year. I thought that was incredible, right? Wow. It was like the top 500 Forbes, whatever. And 60 books a year on average. It's crazy. I don't read anywhere close to that, but it's something to work towards. But very cool, very cool.
Yeah. Hey, I've got a question. I mean, you do all these different things. What excites you most? I mean, what in real estate gets your juices going?
I love solving problems and doing deals. Okay. So when somebody comes to me and says, "I don't know what to do with this," or how do we make this work, that's what gets me going and gets me excited, and figuring out how to put a deal together with somebody that either doesn't want to sell from the beginning or doesn't really understand the value they have in an asset that they own, and conveying that to them. Those are the things that get me excited.
Yeah. And is that, that's not something that somebody who just jumps in can do, right? I mean, that's something that comes with a lot of time and experience.
I don't know if that's necessarily true.
Okay.
I think that I mean, certainly the more understanding you have of the nuts and bolts of real estate, the better you're going to be at recognizing the immediate value that you can add to a particular piece of real estate. But, if you know where people want to go out at night, which neighborhoods are turning around and becoming more attractive to a particular demographic, or you saw a cool building that somebody did or a new innovative way of using a piece of real estate, and you're able to convey that, whether you're an architect, a finance guy, a banker, a teacher, or have worked in a restaurant. I think those are, you can certainly recognize where to add value and be successful.
That makes sense.
Yeah.
Makes sense.
I think that's cool. I mean, yeah, no matter where you're at, whether you're just getting started or whether you've been doing this for, 20 years, there's definitely room for value in most deals. So that's very cool. I want to know, you talked about finding deals. You mentioned, talking to other brokers, talking to wholesalers. Mm-hmm. Do you have any other are you finding things on the MLS? Are you finding them on LoopNet, on CoStar? I mean, where are you getting these deals from? Is it just the brokers and wholesalers?
I'm every day. I'm on the MLS, I'm on LoopNet, and I'm on CoStar. And I have different types of searches set up to return property to me. So, I see anything new that comes on the market. But other than that, it's reaching out to, in Los Angeles, it's a pretty saturated market. So there are no shortage of guys that, there are probably 200 that just focus on Venice Beach. There's no shortage of guys that'll wholesale properties. And as I said, there's just network investors that I've worked with very closely that, again, sometimes will pass on a deal, they'll put it under contract and wholesale it to me. Yeah. So that's the way you do it. It's building relationships.
Yeah, that's very cool.
Yeah. So I guess let's look at the last year. I mean, you've been doing it for, as Brandon says, about 100 years. So we'll focus on the last year,
Thanks, guys.
Because clearly you're not going to remember anything from before that. So his words, not mine.
I didn't say that one. Josh said that one.
That just,
When did I become the old guy?
I'm a vessel. I've been starting to ask myself the same thing, But all right. So in the last year, in the last 12 months, what's your favorite deal? What's the one thing that really you loved that you tell everybody about? And let's talk a little bit about it.
My favorite one that just happened, we actually closed it in February, is the land assembly site that I'd mentioned earlier on.
Yeah.
That took quite some time to put together, and it was fun the way that we found it and figured out how to add the value. There was a lot of risk that was involved in putting that together. So it was to see it come to fruition, especially it lasted through the entire recession.
Yeah.
So to see it come out the other side fruitfully was a big positive for me.
So how'd you find it?
So there was a listing broker that got the listing for the 3-unit and the 4-unit that was owned by one property owner. But didn't really include the duplex that was right in the middle. And he was marketing it as a development site. And my partners and I at the time were, again, in anticipation of the trains coming in, the light rail, looking for sites that we could add value to around the transit stop. So this was literally across the street from one of the stops on the Expo Line train. And when I drove the property, I realized that there was that big donut hole in the middle. So I'm trying to figure out, how is this a development site when you don't own the piece in the middle? So I called the broker and he said, well, yeah, I haven't really approached the lady in the middle yet, but I don't know. I guess I could call her and see if she wants to sell. So immediately I drove over, knocked on the door, and the tenant gave me the owner's phone number. I called her up and asked if she'd want to sell. She goes, yeah, well, I'm actually surprised. I thought the broker that's selling the properties on each side of me would have reached out to me.
Nice.
So got lucky and wrote an offer and got it accepted. And then, approached the broker about possibly selling the two together. And he put me in contact with his principal. And the guy said, I actually thought about taking it off the market because I'm not really sure what I want to do. So he let that listing expire. And as time wore on, I kept in touch with him and got him involved and willing to, basically come to the table with me as a principal and market our sites together. And then I figured, well, the guy that was on the other side of him was a 6-unit building and it had frontage on an alley. So for a development site to have an additional street frontage or access point, it gives you a lot more options on how you can lay out the site and get more units. So called the guy up and got him willing to sell. And, again, I always start with the question, what do you think your property's worth? And, he felt it was worth somewhere around the 575, 650 mark. And I ended up getting him $1,250,000 for his property.
Wow.
Whoa.
Wow. He must have been very happy with you.
Right. So, and that was simply because together as a development site, it was worth more, than it was individually.
Yeah.
Wow.
Yeah. So you're like a packager when you're doing that, right? I mean, you got to see the big picture, and then you're really trying to work with multiple parties to kind of bring it together. But now you're at the point where you got all these properties. So how does the developer come in, and how do we finance that, and how does that whole thing come together?
Yeah, so this was a market where it really was a transitioning area, and the cost to develop a property and get market rate tenants really wasn't there yet. So we figured that the best avenue to go was someone who did subsidized development, affordable housing, senior housing, that sort of thing. So we found at the time the one and only developer in town that had done transit-oriented development that was subsidized, affordable housing, and ended up getting into contract with them. Everything was going swimmingly. At the time, I had been invited. We have neighborhood councils out here in Los Angeles, which is basically a group of residents for each particular neighborhood. They get together and talk about land use issues and safety, and sort of help give the council members the direction that they'd like to see their neighborhood go. And having owned a bunch of properties in this neighborhood and been invited to be on the land use committee, all I heard was, the neighboring Culver City, which is a little more upscale and more expensive, was starting to push into their neighborhood. And a lot of new development opportunities were coming in, but nothing was geared towards affordable housing. So everyone was concerned about, well, what about us? We're getting pushed out of our neighborhood. So I thought that they were going to be ecstatic when I came in with an affordable housing developer that was going to build 72 units of affordable housing. And it didn't quite work out that way. They were appalled that we would come in and build a project in their neighborhood and bring people that were, whom they in their minds had created as the ones that live in affordable housing to live in amongst them in their neighborhood. So it ended up being a protracted education. I'm not going to say battle, but negotiation back and forth to get the support of the neighborhood. But we unfortunately didn't know it at the time. We're up against a financial collapse.
The recession?
The recession. And when 2007 hit, it killed most all new development in Los Angeles, and our project being one of them. So
Now
we were stuck.
You own the property, though, at this point, right? You actually...
Yeah, okay. I owned one of the pieces, the Keystone piece, I call it, that was right in the middle. And so it was just a few years, and luckily we bought it at a level that allowed it to cash flow. So, we held on to it. I managed relationships with the other owners, managed personalities in the neighborhood, and we retooled. And as the market started to come back, we found another opportunity with actually... The project manager for the initial developer had gone and started working at another company, and we were, kept in contact, and it ended up, getting together one day and talking, and they made an offer and basically started up again. And at this point, the way that a lot of affordable housing developers get their funding is through redevelopment agencies, or had been through redevelopment agencies in Los Angeles. Well, Governor Brown got rid of those. So another stumbling block is that it became very difficult to finance these projects. So you had to have particular directions you took them, really niched directions in order to get funding sources. So that's when the idea and the opportunity to provide veterans housing came about. And that's how they ended up ultimately financing the project and get done.
Did you say the Veterans Administration who's financed it, or who ultimately ended up financing it?
Yeah, the way that affordable housing works is you typically have a fairly large capital stack or stack of where you get your money to do the deal. So some of it comes from private equity, some of it comes from the housing department funds in the city, some of it may come from the state level. Some of it may come from, in this case, a fund that's set aside for transit-oriented development on the state level. And then the balance of what you need comes from specific groups or uses. And this, in particular, was the Veterans Association that has money set aside for developments that will specifically go towards housing returning veterans.
So your job, again, and I called you a bundler before, you kind of gripped everybody together. I mean, again, on this type of thing, this is very different than doing a flip or wholesale of residential property. I mean, there's a lot of additional moving parts here. You're doing all the work to bring all these parties together to basically lock some kind of thing in so that your little piece of property, that little Keystone property that you own, gets acquired. I mean, that's kind of the end all be all. Did you end up owning a stake of the actual development project that came on top, or no?
No, we decided to step aside, and when the opportunity came, we had pursued that and thought about that during the recession just to figure out another exit strategy. But when the affordable housing developer came in that ultimately ended up buying it, those are typically situations where you step out as a market rate developer or investor.
So your piece, I mean, you did all this work just to really flip a little piece of property. I mean, is kind of the end all be all, right?
Yeah, exactly.
And so I don't know if you're able to. I mean, is there any way? Can you share those numbers with us on what it looked like?
Yeah, absolutely. We bought the property for it was somewhere around $420,000 or $430,000, and ultimately sold it for $1,075,000.
Wow, not bad. And that took how many years?
We closed escrow this year, so 2014, and we bought it was 2006.
Wow.
So it was a long hold, long haul.
But your cash flow during that time, you said?
Yeah, it covered the property, and very different. I'm actually going through the process of getting a retail loan right now. It's one of the first ones that I've done that's been, other than hard money or private equity into deals. And I'm realizing how hard it is to get loans for the average consumer now.
Yeah. Oh, yeah.
But very different back then. It was, it was still at the point where as long as you had a pulse and knew which numbers to write on the form, pretty much anybody could get a loan. So
that's fascinating, and it's pretty cool. I mean, to just think you had the vision to see that that more could be done. Had you not, I mean, your property, if you take appreciation, and what would that thing have been worth if you were just selling it based on land value or the value of the property itself?
On its own, not as a development site. Yeah. Well, during the throes of the recession, we'd be lucky if we'd have got $200,000 for it. Earlier this year on its own, maybe somewhere close to break even.
Yeah. So you having the wherewithal to see the big picture allow you to create all that value, and that's amazing. That's amazing.
And a lot of luck, it really, really is.
Yeah, for sure. Hey, really quick, you had talked about land use meetings, and throughout, you've talked about just kind of knowing the law, knowing what's happening in the area. It seems to me that that's something that's given you a distinct advantage. Maybe not over other sophisticated investors, but probably over what a less sophisticated investor would be able to do, particularly like a case like this one. Somebody without the foresight to see all the big picture would have bought the property with the intent of doing something, but not seeing that they could package it. They're not going to get that much value out. How much of your special advantage, what's the word you use, Brandon? Your secret sauce? You use a word
unfair advantage.
Your unfair advantage that you have comes from going to land use meetings, really understanding what city council's doing, and understanding what's happening in these areas that you're focusing on.
Yeah, well, I think that what's difficult for a lot of people, especially when they're just getting started in I would imagine, business, is that you focus on the nuts and bolts of whatever is specific to that industry. You read all the real estate books, how to flip this, how to flip that, and you miss sometimes the bigger picture. So if there's a secret sauce on my end, it's always trying to take a couple of steps back to really understand the bigger picture, understand how people are moving through the city, understand what's not working right, and the ideas of what people would like to see to fix it.
Yeah.
That's, I guess, the secret sauce.
There you go. Awesome. Awesome.
So you mentioned private equity earlier, raising money. Part of the money that for the development and for things you work on, it comes from private equity. Can you talk about that a little bit? What is that and how do you do that?
Yeah, it's anything other than debt, money that's not your own. So there are various ways you can do it, and now actually those opportunities are larger than they've been in the past. There's crowdfunding, which a few websites that basically allow people that have small amounts of money to sort of pool it together with other people that have small amounts of money to put it into a bigger pile and do bigger projects that they otherwise wouldn't have been able to get a piece of or be a part of, down to just finding accredited investors, or essentially guys that have a certain level of net worth that are looking for places to put that money in order to earn a return.
Do you have any good recommendations on how do we maybe how does a smaller guy, somebody who's newer at this game, how do they attract that kind of financing? Is it even possible?
Yeah, absolutely. Money finds good deals, and what they really want to know is, people are going to be interested in your track record, but I think equally important is your organizational skills and the fact that you show them or you demonstrate to them that you're not doing this part-time, that you're not trying to turn a quick buck, that you didn't just come out of one of the how to get rich quick seminars, but rather you've taken an interest in really doing real estate, and you've done your homework and you've put a plan together. If you go to people and say, look, these are the types of deals that I'm going to go after. These are the types of returns that I'm going to target. And if I find something that fits these criteria, I'm going to need money to help me get it done. It's if you come in and pitch an accredited investor that way, you're going to find far more success than if you just wait until you have a deal and then cross your fingers and say, please, come on, this is a great deal. Come on, don't let this pass.
Yeah.
Well, I want to drill on that a little bit more then is when you pitch an investor, what does that even look like in your world? I mean, how serious do you take these things? Like, do you sit down, you have a meeting, you sit across the table from them, or is this like, hey, let's grab Starbucks and talk? I mean, how do you pitch an investor?
It's different. There are some investors that they just want you to write down a few numbers on the back of a napkin and sign it. Those types of investors come with longer term relationships and longer track records of success. And some of them are far more formal, and they'll want to see you put together a full projection of financials on where you expect the market to go, support it with comps, sometimes an appraisal. They're going to want to see other projects that you've done in the past that are similar to that, so they know what you're doing, and an exit strategy.
Oh, so what do you show them? What do you give them? What you could just make stuff up, can't you? Can't you just say, hey, I did this deal and that deal? How do you prove to somebody that you've got a track record?
Well, you prove to somebody you have a track record by showing them what you've done, but in there,
that's
there
yours.
goes my phone. Sorry about that.
Same guy.
Mine's easy to shut off. But short of a track record, you show them that you have a plan and an understanding of what you're going after, and you try not to deviate from that plan. And you can have different plans that meet different criteria, but you just got to be consistent in what you give somebody. You don't go to someone and say, look, I'm buying something that, only properties in these types of neighborhoods that I'm going to fix and then sell right away, and we should get returns of X. And then a week later come to them and say, hey, I've got this great apartment building that I'd like to buy and hold, want to invest.
Yeah.
That tells the guy, wait a minute, this guy doesn't really know what he's doing or what he wants to do. So you've got to stay focused. You've got to come up with a plan, and you've got to be consistent.
Yeah. Makes sense. Makes sense. So, this is, I think, Brandon's question. I'm gonna steal it. But how can a new investor compete with you? I mean, I don't know, man. You seem like a pretty smart guy. How do I get in there and get a piece of the action when there's guys like you out there?
Well, in Southern California, there are plenty slices of the pie. And, so there's enough for everyone if you know where to find them.
Yeah.
It's not a market where you're going to, get up in the morning with your cup of coffee, go on the MLS, and you're going to see 80 new listings that are priced well below the market and be the only guy that's chasing them.
Yeah.
But the way that you compete is you find your niche, whatever that may be. And in a market like Los Angeles that is compact and so large, you can be very hyper niched and still have quite a bit of opportunity. So the way you compete is you just figure out what you love, what you're willing to do when it doesn't feel like work, and you're on your downtime, and really go after an investment strategy that suits that.
That makes sense.
Yeah.
That makes sense. Well, before we move on to the fire round, I'm just curious if you have any other last tidbits that you might want to share, just kind of general knowledge or craziest thing you've done, anything like that.
Craziest thing I've done. I can share my mistakes.
Yeah, that'd be great. Love it.
Okay.
Love it.
So, or the mistakes that people make. I actually wrote these down. So, on the buy side, I think the biggest mistake that people make is not knowing when to pass. And especially if you're value-added real estate, or if you're someone that likes to solve problems, it's sometimes hard to just figure out, what, no matter how you skin it, this isn't going to work.
Yeah.
And to move on to the next one.
And that's hard. That's hard to
yeah,
get emotionally
right?
involved.
Yeah.
At least some of us do.
I do.
Those of us who have emotions, Brandon.
On the rehab side, one of my early lessons is force feeding, not to force feed.
What do you mean?
It seems like a lot of new investors will figure out or think that they've figured out what everybody else wants. And particularly someone that grew up or lives in one of the more expensive neighborhoods, going into a more affordable neighborhood and thinking, well, I would never live without this or without that, and making sure that they spend the extra money to put it in, only to find out that after they close escrow, someone rips it out and puts something completely different. And the way that had played out for me is I had been, again, back in the 90s, restoring historic homes in North Pasadena, which was a higher price point than one of the other markets I had moved into, but found this beautiful craftsman home. So I took it upon myself to make sure that I got only the right paint colors that you would use that were appropriate for that time, put in certain kitchens that I felt were, appropriate for a craftsman home, landscaped it, again, the way I thought you should for a craftsman home, sold the house. A month later, came back. The entire outside landscaping was torn out.
Mm-hmm.
The house was painted a completely different color. And the cabinets that I had put into the kitchen, those period-specific cabinets, were torn out, and they didn't even have the courtesy of throwing it in the trash. It was sitting on the curb for the trash man to just come and pick up, or anyone else that was driving the neighborhood. So
nice.
What you feel is appropriate isn't always necessarily what the market feels appropriate. So you got to be aware of
That's a great
selling.
one. That's a great one. Yeah, a lot of people, especially I think newer rehabbers, tend to over rehab as well. Not just get the style. Assume the style is going to be what they want, but they kind of, they overdo it, and it's the same thing. Don't make that assumption. Upgrade to the level that property is at, because otherwise you're just wasting money that you don't need to waste.
Yeah. And then another really big one on the selling side is forgetting to qualify your buyers. I've seen so many people make this mistake that in thinking that the highest price that comes in is automatically the best deal. Let's go to escrow with them, only to find out 30 to 45 days later that buyer couldn't perform.
Yeah,
it's extraordinarily important to qualify your buyer before you tie yourself to them in an escrow or in any type of contract to get yourself out.
So I guess the obvious follow-up question to that is, how does one do that?
Well, what we do, first step is we have preferred lenders that we work with that I know will be very candid with me and won't sugarcoat whether or not somebody is financially capable of closing a deal. And so I ask everyone to cross-qualify with my preferred lenders. They don't have to use them to get their loan, but at least then I know, usually within a few hours or a quick credit reference, whether or not this person can actually get themselves qualified.
And what price point are you talking? Do you make people do that? I mean, are we talking you buy out, $200,000 house? You're going to make the buyers do that, or if you're trying to sell a $200,000 house, are you talking only for multi-million-dollar properties?
At any level, it's especially important at the more affordable levels or on the FHA level. You hope that the real estate professionals or the brokers that buyers are working with at the higher price points will do their own qualifying. But it's equally as important at that price point as well to make sure that, if someone says they can spend $3-4 million on a property, they have the financial wherewithal to do it.
Yeah, I think that's great. I think that's really good.
Yeah.
I mean, I've had that before.
Sure.
I've had my properties tied up several times and then they back out a month later. Because I just, the most I ever do is I'm like, well, are they pre-qualified? Yes. Okay. This as far as I ever push it. I never even look in. So yeah, that's a really good tip.
Yeah.
So.
Even on the investing side, if you're selling something to an investor or something pre-renovation, understanding the difference on whether you're getting into bed with a wholesaler or an investor, asking somebody, well, what have you closed, or how many deals have you closed in the last month or 2 months? What are the addresses? Checking on those addresses.
Yeah.
Not to say that going into contract with a wholesaler is a bad thing, but you got to know what you're getting into. And if you think you're getting into a deal with an investor only to find out that someone's trying to wholesale the deal, it could be disappointing.
Yeah, that's great.
Yeah, cool. All right, well, hey, let's kind of start to wrap things down here and move on to the...
It's time for the fire round.
These questions come straight from the BiggerPockets forums, and we're going to fire them at you, Allan.
Okay.
All right, number one, what are your thoughts on short sales? Do you go after them or do you avoid them?
I've done my team and I, about 350 short sales over the course of the last few years. So yes, we go after them. They're great opportunities. And again, if you're a problem solver, they're a great spot to be, but it takes a lot of work. It takes a lot of patience, and it's really, two different transactions that you're working on. One is selling the property. The other is figuring out a settlement with the bank. So they're very involved. I would think that going forward from this point, you're probably going to see very few. And even if people are still upside down in their properties, banks are going to be less motivated to settle short, versus carrying it out through a foreclosure, because odds are, or at least the way the market's moving right now, property values are going up, not in the other direction, which is part of what helped, push a bank towards a short sale decision.
Hey, Allan, how big is your team, really quickly?
I'm big on collaboration. So a lot of the people that I work with are separate companies that we just have joint ventures with.
Sure.
My team in my company is 3 people, someone that does accounting. I have a field person that goes out and looks at properties and that sort of thing, and myself. But, the group of people that I work with, I've got attorneys. When we were doing a lot of short sales, I had a team of 3 different people that all they did is call the bank all day long, from the moment they got in the office till the moment they left at the end of the day, calling and negotiating, making sure that files were moving forward.
Yeah.
So
Gotcha.
I think that's an interesting point too, about not having to hire every single person to actually be a W-2 employee just to work with them. I mean, there's a lot you can do just by hiring other companies. I think that's great.
Yeah, for sure.
Next one.
Well, all right. So next question on the fire round is, here we go. With tight inventory, how much of a discount can an expector? I'm having a hard time here. Let me try again. With tight inventory, how much of a discount can an investor expect to get? Whew. That was tough.
You got it out. Good job.
Yeah. Thank you.
And my answer to that is, I have no idea. And the reason is, for me, I don't really look at a discount because I rarely agree with the market value that someone brings to me when they show me a property. So I look to hit a particular return. And for me, if I turn my rehab project around in about 6 months, I look to hit an 8 to 10% return every 6 months. So anywhere from, a 16 to 20% return annually.
Nice. Okay, cool. What are the best ways to find investors to fund your deals? We kind of talked about this earlier, but yeah.
Yeah, like equity partners?
Sure, yeah. What's the best way to find them?
Well, I think to get deals done yourself and start or come up with a plan, like we said, if you don't have a lot of deals under your belt. But short of that, I go to investment club meetings. Sometimes they're not as fruitful. Sometimes they are. If you can walk away with one business card that's worthwhile, to me, that's a worthwhile trip. I like to look at comps in the markets that I'm in and find out who it is that's buying and renovating these properties. Call those investors, get to know them, find out who their partners are, who their hard money lenders are. And really, it's getting to know your competition, getting to know what they're doing and what successes they're having, and asking them just straight out, who invests with you. Nice.
All right, last question. For someone new to rehabbing and no money to start, where would you say is the best place for them to get the funding, or should they even move on and try and rehab when they don't have their own cash?
That's a tough one to answer in general. I would say that if you have a construction background, the answer is going to be a bit different than someone who doesn't know how to wield a hammer.
Yep.
If you can, bring the skill to the table, if you're an architect and you can bring the design, element to the table, then you can go out there and find the financial partners to partner with you. And that would be, I would think, the smartest way to go out and put a team together is go out. If you have those skill sets, go out and find something that you feel you can add value to. Again, put together the financials on what it would take to get there, and money will find good deals.
And what if you don't? What if you have no skills like Brandon?
If I think that you're going to have to find a skill or bring your own money to the table. You can always learn. You can learn how to spot a deal. You can learn how to put something under contract. That's a skill. That's a value add in itself. If you've locked yourself into a deal and nobody else can buy it out from under you, like I'd said earlier, that's bringing something to the table that has value.
Yeah. I think I said that line in the book that we came out with recently was like, there may be such thing as no money down, but there's nothing called no investment down, right? There's always an investment of something, whether it's capital or creativity or experience or whatever. I think that's kind of summed that up well. So,
by the way, I've got to ask this question. I saw it in my notes, and my notes tell me that you've done upwards of almost $1 billion in transactions throughout your career. Is that an accurate assessment?
That's correct. Yes.
Holy smokes. What's the biggest deal that you were part of? I'm just curious. What was it?
Let's see.
Put you on the spot here.
I know, right? Dollar volume size.
Yeah, dollar volume size. Yeah.
Office building downtown Los Angeles is $23 million.
Okay. Wow. And you were the broker on that?
Yeah.
Right on. Cool.
Wow.
And was that exciting being part of a deal of that size, or same as everything else?
Actually, it's an empty building that used to be housing, used to be an office space, and is now going to be housing with retail on the bottom. So, again, it's functionally obsolete building, or maybe not functionally obsolete, but something that had a higher and better use if it was repurposed for something else. So a lot of fun.
Right. Nice. Yeah. Watching the transformation of LA, I moved out there in 2000, and just seeing how it's changed over the years. And I mean, some of these projects, it's unbelievable. I mean, it's happening across the country now, but it's a lot of fun to watch these things, and knowing that we as real estate investors and commercial brokers are playing a role in the changing face of our cities. And I think it's amazing.
Yeah, it's fun for me. I love being a part of it whenever I get the opportunity to.
Yeah, right on.
All right, hey, let's move on to the world famous for. These questions we ask everyone every week, so let's see what you got to say. Number one.
All right.
What is your favorite real estate related book?
Let's see. I I'm less about the books that are nuts and bolts real estate, and more about stuff that's at bigger picture, more about planning and understanding what moves. So my favorite book is very Los Angeles specific. It's called Reluctant Metropolis, and it's written by a guy named William Fulton, and it's all about all of the political aspects and other policy making that's happened over the course of the years in Los Angeles to sort of create both the problems and all of the successes that have happened in the city.
Nice.
Cool.
Nice. What about your favorite business book?
My favorite business book is actually, I think it's only about 80 pages long. And it's written by a guy named Bo Peabody, who started a company called Tripod.
That's his real name?
Bo Peabody is his real name.
Okay.
And it's called Lucky or Smart. And he, again, started this company that was basically allowed people to build websites back in the early 90s, which was a very novel thing, sold it to a company called Lycos, and ended up being locked into instead of getting cash for the investment, it was a $50 million buyout. He got stock in Lycos and was forced to hold on to it for a certain number of years. I think it was like 3 years. It went actually just the opposite. It ended up going up tenfold.
Oh, wow.
Okay.
He sold it just before the collapse of the internet bubble because he wanted to buy a house and he didn't understand stocks, so he put it all in bonds. So the book is about, as an entrepreneur, recognizing the difference of when you're lucky and when you're smart.
Gotcha.
Interesting.
Gotcha.
I'll have to
Yeah,
check that out.
Lycos was like that was the Google of the day. That was a great
Right?
site. I used to love that site. There was a little dog, wasn't it?
Yeah, I think you're right. I think that was the dog's name was Lycos.
Yeah, something like that. Cool. Well, it sounds like an interesting book. Hobbies. What do you do for fun?
Well, I've been surfing since I was a kid, so I still do that when I get the opportunity.
Where do you surf?
I grew up down in Orange County, so my preferences are still Huntington Beach, or if I can find the time to get down to Trestles, which is closer to San Diego.
Yep.
I am trying my best to be consistent and find the time to get a pilot's license, which is something I've wanted to do since I was in college.
Nice.
And it's kind of dorky, but started beekeeping about a year ago.
Really?
Oh, cool.
Yeah.
That's
That's
cool.
great. It's great. My brother does that, so it's
yeah?
it's kind of an interesting hobby.
Yeah. And for a real estate guy, watching bees and how they move around the hive and the things that they do is it's really fascinating.
That's
cool.
My next door neighbor has a bunch of, my next door neighbor died yesterday, actually, but he had bees. He's old. He's 98 or something like that, but he has a ton of bees in his backyard. So we get the benefits of the flowers and the garden. Like we have like the best looking, my wife has like the best looking garden in our area because the bees, I don't know. It's great. So
Excellent.
Cool. All right. Let's move on to my last question of the day. Allan, what do you believe sets apart successful real estate investors from those who either give up, fail, or never get started in the first place?
Tenacity is certainly something that is going to set you apart. You know, it's and that kind of plays in, I guess, to the other thing, and that is being dedicated to it. If you come out, and again, it's so easy to spot the guys that went to the Get Rich Quick seminar over the weekend, calling you on Monday, Tuesday, whether they're calling you as a broker or calling you to pitch you a deal. There's a difference people can tell when you're just trying to make a quick buck versus trying to really add value, in real estate. So I think that's important, is really understanding where you can add value to the transaction and really looking at it from that perspective rather than how quickly can I turn a buck.
That's great.
Yeah.
That's great. Well, Allan, before we let you go, where can people find out more about you? I know you've got a website. You want to share that with us and anything else you got?
Yeah, my website is asgreinc.com or Allan Glass Inc.com. And then, of course, I'm on all of the social media sites on Facebook, LinkedIn, Twitter.
BiggerPockets.
BiggerPockets. Of course, I'm on BiggerPockets.
I'm just checking. I'm just saying. I had a cough. I couldn't control myself. So
good job.
Yeah. Awesome, man. Well, listen, we really, really do appreciate you taking the time, and we thank you for all the fascinating insight. I think you definitely opened at least my eyes to a couple things, and my head's starting to spin, which is a beautiful thing. So, thanks for being on the show. We do appreciate it, and we will certainly see you around.
Of course, I had fun, and I appreciate you guys. Thank you very much.
All right,
you got it.
Thanks, Allan.
Take care. All right, guys, that was Allan Glass on show 98 of the Bigger Pockets podcast. You can check out the show notes at biggerpockets.com/show98. This was definitely a cool show, Brandon. I mean, we haven't done a ton of commercial shows, and the ones we've done, I mean, I really like this one because, again, of that concept of driving value, and not just the concept of driving value, but finding creative and clever ways of doing it. And Allan's story about, buying that lot and, just kind of being really smart about what he did with it, and, increasing the value by multiples was phenomenal.
What I like about it too is that strategy kind of shows the whole mentality of BiggerPockets, in that there is no recipe book on this is exactly how you do a deal. There's no book called how to put together a deal with 4 different properties, combine them together, and bring in equity partners and bring in the VA. And
I'm actually writing that book right now.
Good.
Yeah.
Good. I'm glad you are. So yeah, I thought it was great. I thought it was excellent.
Yeah. Awesome. Well, if you guys want more like this, keep listening. If you haven't listened to any of our previous shows, definitely get out there and check them out. You could listen on iTunes, on Stitcher. We're starting to upload our shows to SoundCloud, and we're also putting older episodes on YouTube. So we're all over the place. If you're looking for a different way to check us out, there's quite a few methods to do so. Beyond that, just come join us on BiggerPockets. BiggerPockets is the place that investors hang out. Guys like Allan, who've done $1 billion in transactions, spend time on BiggerPockets, down to guys who are just getting started. So, we definitely recommend you give it a shot if you haven't already. Get on and get started. Otherwise, check us out on Facebook, Twitter, G+, LinkedIn, all the other various social networks, and keep paying attention. Be good to your friends and family this Thanksgiving, and thank you for spending your time with us. And again, I am thankful to all of you guys for being a part of our world and for being part of BiggerPockets and the audience of our show. So thanks for listening, and we'll catch you next time. I'm Josh Dorkin, signing off.
You're listening to BiggerPockets Radio, simplifying real estate for investors large and small. If you're here looking to learn about real estate investing without all the hype, you're in the right place. Be sure to join the millions of others who have benefited from BiggerPockets.com, your home for real estate investing online.